Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to talk a little bit about what's heading our way this week. We've got breaking news right now, and it's actually very important that we get right out to this. We've got a big bum rush going on, bum rush to the bull here in U.S. oil. We've watched U.S. oil explode over the last hour, 2 hours. You're up about 3.5% on the day, right around 106. 106 even, and the reason why is we've got developments in the Iran war. So much information out right now. I'm not going to try to know the truth. There are reports that a U.S. warship was hit. There are reports that the UAE is under fire now from missiles. There's all sorts of scuttlebutt out there that we've seen some escalation here in the Iran war, and the markets really are reflecting maybe a sudden development here. Maybe the peace deals that supposedly are in the works are off. I mean, you can see right here, Dow Jones Industrial Average is off about 1%. This is all developed probably in the last hour or so. So by far, this is one of the most challenging periods I've ever been on doing live streams and breaking down price action, just because the developments are so rapid. So when we're looking at something like a U.S. oil, I mean, if you want to take a good look at the 30-minute chart, I mean, you can really see this when sort of these reports started breaking, and now during the U.S. session, I mean, there's a real chance here that we saw some an escalation in the Iran war. So we sort of thought things were going to wind down, and that just simply isn't the case. Today we've got really the big break, and you're up to about 106, 106.15 in crude oil, and conversely, we've got bearish price action that's really come across the board and been burying things like the Dow over about the last few hours. So right there, opening bell, ding, ding, and now we're just coming off in a big, big way. So that correlation really seems to be back in play, where we've got the oil up, stocks down, a lot going on. And it really just depends on what exactly you guys see out there in the news. Keep a close eye on the news cycle. It feels to me like business has definitely just picked up, and we're watching crude oil closely, watching stocks closely. But man, I'll tell you, this is really a difficult news cycle to sort of put our thumb on and figure out what exactly is going on. I mean, I'm watching this stuff out of one eye and talking and looking at my charts in the other eye, and it's just things are developing very quickly. So it's been a stalemate. With the Iran war has slowed down, and it has been a stalemate. Right now, I'm looking at the VIX. The VIX is up 10%, still down around 18 or so, very low VIX reading. So things are changing a little bit, but I don't know what to make of it. So I'm going to caution is the better part of valor. Today is a Monday session. Mondays are great for game planning. And if we see any breaking news items while we're on here, I'll be sure to cover it. So I want to welcome everybody back to the little live stream out there in YouTube land. Kelvin, good to see you, Kelvin. Tina Jing, how you doing, Tina? I'm doing very well here. T. Marina, good to see you, T. Happy Monday to you and everybody out there. And let's see out there in the How to Trade community. We've got Tuku, good to see you, Tuku. JC, good to see you, JC. Welcome to Andrea Garwal, always a pleasure. Andrea, welcome. If you guys have any markets you'd like to look at today, be sure to pass them along my way. We've got a few that I was asked about, the Forex pairs that I was asked about over the weekend. CAD Yen's one. We're going to look at the dollar yen. We've got a play there. Great Britain pound, Australian dollar. A lot of folks are trading that. And then also the euro, Great Britain pound. A lot of folks are trading that as well. We do have a central bank announcement coming up in the early Tuesday session for the Forex going to impact those Aussie pairs. I'm going to go ahead and break that down for you as well. We're actually looking for a rate hike out of the Australian, the RBA, and this is some good stuff. I mean, now we're starting to see central banks go in different directions. We're starting to see maybe a news cycle out of the Middle East. It's going to spark some participation, and buckle up. Buckle up, because this feels like it's going to be another big week of a lot of action across the board. And we'll go ahead and take a look at our precious metals too as well. Interesting zone we have developing in silver. I think we were on to something last week. I'm going to go ahead and show you that chart as well. So sip of coffee and away we go. Shafir, good to see you. Shafir, welcome. Jason Maxon, good to see you. Jason, welcome. Lewis, always a pleasure, Lewis. Like I said, if you guys want to see any specific markets, be sure to let me know and reach out in the live chat, and I'll go ahead and cover them. Switch markets, remember, if you want to trade anything that we talk about today, maybe any of the strategies, you can go ahead and just check out Switch Markets, the homepage. A lot of resources here. We covered some of the resources last week in our Switch Markets Live webinar trading series, but they got all sorts of EAs. You've got all sorts of tools, calculators. We actually spent a little bit of time going over the Risk of Ruin calculator, and there's a lot of videos that we're putting out over on Switch Markets on the YouTube channel. So if you haven't already checked that out, be sure to check that out, and you can see all of our new videos coming out on some of these tools where we break down exactly how to use them and how to get up and running with maybe a little bit of technology that you aren't too familiar with. There's also been some big breaks that are going to be coming our way with sort of the added value for the Switch Markets clients. We're going to be talking a lot about Trade Copier. That's going to be coming out. Also going to be talking more about Algo Builder. That algobuilder.com, they've really started updating that software and turning that into a robust AI platform. So that's going to be free with your Switch Markets account. I'm going to be covering Algo Builder more and more as we dive into the summer months. So welcome to May. It's already May, the 5th month of the trading year. So I want to welcome everybody back into what I would call probably the last, I can't really say the last big month for a while, but I think we're going to see a lot of fireworks in May before things sort of calm down a little bit for the summer months. A quick scheduling note, I will be out of the office the last week of this month, so I'm going to be gone actually in Europe for the last week of this month, last week of May, and then we'll be back doing this live streams as usual in early June. I'll be sure to cover that throughout the month, so there's no confusion. But if you did book a one-on-one meeting with me for the last week of May, probably going to have to cancel those. I'm going to have to cancel them, so I'll check my schedule. All right, everybody, let's get on with it. There's a lot going on here with regards to a nice week 19. Mondays are always Iran war. Until proven otherwise, that's exactly what we're talking about today. I'm watching things closely. We're going to look at our poly market odds. We're going to see what the bettors out there, what the markets believe is going to happen next in Iran. Tuesday is going to be the RBA interest rate decision. That's early Tuesday session during the U.S. Overnight session. That's a big one. That's going to be a big one because we're expecting a little bit of a change, of a shift in a central banker tone. Instead from going dovish, we're starting to switch back to being hawkish. So we're going to talk about that as well. Wednesday, ADP non-farm employment change in EIA inventories. Big day Wednesday. Big day. ADP non-farm employment change is going to shake the markets a little bit. EIA, anything to do with crude oil right now, we must take into account because it's such a volatile, sort of a crazy market right now. Thursday is initial jobless claims. Sort of had a big downside beat last week with initial jobless claims. More people are going to be looking at that number on Thursday because it is ahead of Friday's NFP Live. I'll have NFP Live for you bright and early on Friday, so be sure to tune into that. We'll do some live trading and break down the jobs numbers. Also, a little bit of of a change in our streaming schedule. I've been going typically at 1 p.m. Eastern for years and years and years. For a few weeks here, I want to get into the early U.S. session and maybe make some more live trades. It seems like a lot of times we get on here this time of day and there just isn't much going on. But I'm going to be going on Tuesdays and Thursdays. We're going to be going 30 minutes after that U.S. Open. So that's going to be about 10 a.m. Eastern, about 8 a.m. Mountain Time, and I'm not really sure what it is GMT, but we're going to try that for another week. We did it last week, so most of the streams this week are going to be early. You're going to have those Tuesday, Thursday. That's going to be at about 10 a.m. Eastern, and then Friday's going to be NFP Live. So we're going to get a lot more live trading in, and we're going to be looking more at that orb strategy on Thursday. We're going to do a live webinar series on the orb strategy. Got a lot of questions, a lot of interest on it, so we're going to go ahead and see if we can trade it live. Okay, news of the day. Not really much going on here. It's a Monday session. Don't typically see market-moving events scheduled for today. But you have the 3- and 6-month T-bill auctions. Both of those yields are now the same. That sort of suggests that we don't know what monetary policy is going to bring, but they are rising. 3.61% on the 3-month, 3.61% on the 6-month. So as those yields rise, that means the U.S. government is attempting to raise money. Essentially, that is known as the risk-free rate. The T-bills rate is the risk-free rate guaranteed by the federal government, and those are the yields you get on your money. So 3.61%. Not bad, not bad. We're watching the 10-year note closely as well. If we see that 10-year go up to about 5% yields, then we'll know that the war isn't going anywhere anytime soon. We'll see. Let me see. NY Chi, good to see you. NY, welcome. I'm out there in the How to Trade community. So 3- and 6-month T-bill yields, not really much happening. This is going to be a good look at what the big news event's going to be, and it's going to be for the Aussie. And like I said, we've got a couple Aussie pairs that we're going to cover. But our RBA interest rate decision for May, that's coming during the U.S. overnight and coming during that early Asia-Pacific session, 4.35%. We're looking for a quarter-point rate hike out of the RBA. We haven't seen anybody really hike rates aside from the Bank of Japan and the BOJ. But right this minute, we're starting to see that hawkish pivot that a lot of people promised us would happen if this Iran war was prolonged. And you see right there, there's your RBA interest rate statement. So 4.35%. We're looking for interest rates to go up in Australia, which is going to be a big salvo. We're going to see if the rest of the world has to follow that trend. Undoubtedly because of the pressure being placed on the energy markets. A lot of big developments there as that Strait of Hormuz remains closed and the shipping the energy specifically to the Asia-Pacific region. We heard a lot of talk out of the BOJ last week about, hey, we may have to hike interest rates to stem inflation that's being generated by the energy shortages, essentially. Well, this is a good look at your interest rates from the RBA, and this goes back 3 years, sort of raised them up here, and then we started cutting aggressively, and now we're raising again. Not really what everybody was expecting out of the RBA, but this pivot right in here, you're talking about jacking these rates right back up to 4.35%. That could be a very, very big deal for the Australian dollar. So let's go ahead and take a look at a couple Aussie pairs. Great Britain pound, Australian dollar. This is one that many people are trading right now. You could see that it's sort of in I won't call it a downtrend, but you've definitely lost some puff. Going back, really over the last year or so, going back to June of 2025, it's sort of been a steady sell-off. Now, a trend is something I always say, like, big moves like this are trends. Outside of my Bollinger Bands, those are trends. Well, this is still a pretty good move. I would call it more of a correction than a trend, and you can see that we are very bearish right now. So for me, relatively easy read on this market is just to sell. Look to get a decent sell trade location, maybe something like that from that spike high to that spike low, maybe stepping up and selling 195s. That's probably a pretty good zone right up there. The problem is it's way up there. I mean, it's way up there. So right here, what I would be focused on with the Great Britain pound Australian dollar is that you've got compression. You really have compression. You've got an inside month. We traded completely inside of March's range during April, and now we're starting a new month. So what I would be looking for potentially is this May trade to break beneath April's lows, and if that's the case, I expect it to take out these yearly lows that are down there that were established during March. So very much a wartime type of a pair. Remember, Australian dollar correlated to gold, correlated to metals. The stronger the metals get, probably the better off the Australian dollar is. Right now, the metals not going real great. We're going to cover those in a second. But this type of compression, you may be in a position to get a washout, maybe down to 185 or something like that. As far as how would we look to trade it right now for this week, well, I mean, the odds are we're not going to get a pullback to 195 really anytime soon. pretty good symmetry sort of developed here. Nice sell-off, and now we've got some compression. Potentially, we could be looking to get something like this, maybe a spike high right down there to that spike low, and maybe we could step up and sell a 190, maybe a 190 and a quarter. That's probably a pretty good sell, but once again, it is still up there about 100, over 100 pips. So, we want to be aggressive. We want to trade. We want to get involved right now. Really choppy market conditions. I don't want to be long. In my view, I really don't want to be long the Great Britain pound Australian dollar. Be ready for some volatility, though, if you do see maybe a surprise tone out of the RBA. They've been pretty clear that they've wanted to raise interest rates for a while now. Today they're supposed to do it, or that Tuesday session they're supposed to do it. We'll wait and see. We'll wait and see how it develops. All right, let's go ahead and take a look at the Australian dollar, U.S. dollar. The U.S. dollar is showing a little bit of puff today, up about 0.25% on the DXY. So I would say that the dollar is ticking a bit higher against the majors. But when we look at this Aussie chart, what is there really to sort of sink our teeth into? I mean, you can see that the uptrend here, this is much different than the monthly we just looked at for the Great Britain pound Australian dollar, but nice compression, nice break. Weekly compression break. There's sort of your move, your uptrend. Now you're pulling out and the chart's getting a lot dirtier. So for me, you can see that last week we traded both sides of the previous week. That's sort of it's tough to deal with something like that just because you don't really know what price is doing. Essentially, over time, as we move from left to right on our pricing charts, you get ranges that theoretically are to tighten. You're establishing value areas. And when you have something like this where those ranges are actually getting bigger, that's sort of that megaphone formation, not really a triangle where we're getting tighter, but it's the opposite of that. It's a megaphone where you're going from a tighter range to a broader range. That suggests there's a lot of uncertainty in the market here. So when we look at the Aussie US dollar, we say, okay, we've got all sorts of different market drivers facing the USD. We've got a new Fed chair coming in. We've got Jay Powell leaving. We've got inflation here in the United States ticking higher. I mean, I'll tell you a story about gas prices in a minute, but what we're looking at right this minute is really just sort of the unknown unknowns facing the U.S. dollar has made all the majors, not all of them, but this one especially, Australian dollar, U.S. dollar has made it really a challenge to trade. So what I would be looking to do here is just keep things very easy. I would be working right off of March's low down there all the way up to April's high, and then maybe we can get a pullback down there to 70, 75 or so, about 100 pips south. I think that would be absolutely fantastic if we could get that move today on the RBA. That would give us a real opportunity to step up and trade with a little bit of swagger and maybe some confidence. I'm not confident in much right now on this Australian dollar chart just because this weekly range suggests that uncertainty that's facing not just the U.S. dollar, but the Australian dollar and the metals markets is starting to really play hell in valuations. So for me, I want to see this thing move. Disequilibrium is what we want. I want this market to get out of whack, a little bit disjointed, so I can step up and buy my support zone with a little bit of confidence. As far as do I want to sell the market, I'm not really interested in selling right now. You can see a lot of folks have. They've sort of got their back up against this weekly double top, which is right up there at about 72 and a quarter. If they're taking shorts, potentially could stop themselves out up over that double top. It's not a bad strategy. I would proceed with caution here, though. I really would. I don't know that this is the time or the place to be holding a position, especially going into a central bankers meeting. I don't think that's quite going to be the play. Let me see Eli, 512 Eli. Good to see you, Eli. Great Britain pound USD is in that compression on the monthly. We'll take a look at the pound. We'll look at the pound dollar, and then we'll look at the euro pound. When we look at the weekly, to me, this was relatively straightforward about 2 weeks ago. You're looking just to buy that area down there. You can do something like this now just on a weekly chart. But I see what you're saying. It's just very, very tight. You've got a lot of price action that's developed right around 135. That's probably the 10,000-pound elephant in the room. But right there is going to be your support zone. So 38% is right there at 134.69. And we've also got a 13-period EMA, which is there at 134.59. That area right in there is probably pretty ripe if we get it as downside support. So we're about 60 pips off of that. Pretty good level, though. 13-week EMA right down there at 134.59. And we've also got the 38% on that weekly wave was right around 134.69. I'm still relatively bullish here on this pound dollar, but the dollar, if this war kicks up in a big, big way, and like I said, I'm watching the news right now, and if this war kicks up again, the dollar's going to gain more puff. So we're watching it, and this is all a function of the Iran war. So let's wait and see what happens. I don't know that we're going to get any rate cuts here in the United States for quite a while. I think they're going to come sooner than the markets think, but I don't know that we're going to get one before September or maybe even November. So a lot going on there. As far as what do we need to do to trade this successfully, any of these Forex pairs that we're covering today, be patient. Be patient. Don't rush in here. It's too choppy right now. Let these ranges set up a little bit and be patient with it. And then you'll have an opportunity potentially to get in maybe tomorrow, maybe the next day, maybe Thursday. We're going to have some great trades. It's just a question of what do we want to do today with regards to what do we want to do tomorrow. I would much rather be aggressive tomorrow than on a Monday. I want to see everything set up first. As far as your monthly, this right here is a good observation, Eli. You can see that this monthly chart, I mean, look at that. I mean, it is what it is. I mean, that's just ricocheting back and forth between just beneath 140 and 130. So a relatively big range. Point of control's got to be 135. I would probably bet on that. As far as from a macro perspective, what could we be looking at out of a monthly? Really tough. This move back in 2025, sort of 2025's range, essentially. You've got this year right there from January all the way up to those highs in July. Give us a pretty good range to sink our teeth into. So if we don't want to trade a weekly and we want to take a look at the macro picture, the big picture for the Great Britain Pound USD, you'll notice I'm ignoring that spike high right there because I want to see the range, how things are lining up with 2025's range. So, long story short, very good observation about this just being in brutal rotation. Nice big rally, a pullback to 131, and we've just been ricocheting around in there for seemingly the last 9 months or so, somewhere in that neighborhood, the last year. Crazy stuff. Eventually we will move. Is it bullish or bearish? I'd say it's slightly bullish. I would say I'm bullish here, but as far as do I know where the price is going to go in the short term? No way. I have no clue. There's way too many outliers facing the Great Britain Pound USD, and that's not my game. That's not my game. We got to wait to see a little bit of this geopolitical picture clean up a bit, and then also what we need to see out of the Fed. I want to see Warsh get sworn in, maybe check a meeting or two out with him at the helm, see if they're going to approach business in the same fashion at the United States Federal Reserve before we make any huge decisions. Let me see. 512 Eli, what about Project Freedom? Wouldn't that drive big moves? Project Freedom. I'd have to Google it. I'll be honest with you. Project Freedom. Not sure. I can tell you that the risk analysis that I did last Friday was essentially either escalation in Iran, either a surprise peace deal in Iran, a political assassination, and then also we're starting to look at Taiwan. 2 weeks, Trump will be going to China on his official state visit. Taiwan is going to be the number one thing they're talking about, how Taiwan fits into China's long-term plans. And I think that we're starting to see the shift, a potential shift into that China-Taiwan issue that a lot of us have really been watching closely for about the last 5 years. So there's a lot of risks on the board. I don't know that Project Freedom is one of them. I'll have to do my homework on that one, Eli. I missed it, completely missed it. And that's one of the great things about having a community like this is somebody always sees something you don't see, and that's absolutely fantastic. You learn something every day by just sharing some ideas. So good stuff. I'll have to look into it. All right, let's get back out to this news cycle. Iran war live. UAE says it intercepted missiles. Drone sparks a fire at an oil site. So it looks like this... and here you go, 4 minutes ago, Iran war. Tehran threatens U.S. ships over Trump plan to break its blockade in the Strait of Hormuz. New attacks were reported in the Emirates and Oman on Monday, and U.S. Central Command said Navy ships shot down a bunch of missiles, right? Iran fires missiles at UAE, drones at tanker. Drones at tanker in the Strait of Hormuz as U.S. says it's guiding ships. This is a delicate situation. It looks like this looks like it's going to kick off. Trump says U.S. will guide trapped ships through the Strait of Hormuz. That means they're going to put warships in there. Iran has pledged to sink them. Wow. I mean, this is escalation. The U.S. military said 2 commercial vessels safely transited the strait amid efforts to restore and transit for commercial shipping under the Project Freedom Initiative. There you go. Great call, Eli. You beat me to it. Okay, so the Project of Freedom Initiative announced by Trump. This is absolutely going to drive the markets 100%. 100%. Iran regime says it received a U.S. response to its latest 14-point peace proposal, which says it aimed at ending the war, not extending the current ceasefire. Trump said over the weekend that he'd likely reject the proposal as they have not paid a big enough price. 21 minutes ago, CENTCOM chief says Iran fired at U.S. warships. CENTCOM chief says Iran fired at U.S. warships and U.S. destroyed 6 Iranian small boats. This is escalation. Okay, so let's step back from our headlines. Let's not get too carried away with them right this minute, but we have to be real about what's going on here, and we are seeing escalation. If a tanker is sunk, if a U.S. warship is sunk in the Strait of Hormuz, I'm just going to tell you right now, if they sink a U.S. warship in the Strait of Hormuz, you're going to full war. I guarantee it. Going to full war. So this is a major escalation. It looks to me like the ceasefire's over, and you're going to be back at you're going to be bombing here relatively soon again. So I don't know. We're going to take it easy. We're not going to make any snap decisions. Right now, the price action that we're seeing, stocks down, oil up, sort of suggest that ceasefire may in fact be winding down. All right, a lot of you are trading the Euro Great Britain pound. Fantastic pair if you're interested in slow-moving, plotting financial instruments. I like trading crude oil and gold because they move fast and they don't give me much time really to think. I just react and trade them. But this right here, this is a very slow market. This is one of those markets that you've got to have patience on if you're going to be trading the Euro Great Britain pound. Huge level in play. Absolutely huge level in play. 86.25. That is it. That is the game in my view. If you do break beneath 86.25 and 86, you're going to come way off. So is the pound going to gain a lot on the euro? I don't know. I don't necessarily know that we're going to see much of any action, but it does look sort of similar to that Great Britain pound USD where you're above that long-term 38% level, just sort of checking it. Euro Great Britain pound, this one's a little bit cleaner cut. We sort of tested the water beneath April's lows. Your low there was 86.22 for April. We hit 86.20, and then I've rebounded about 18 pips. It's not a huge move yet, but if that rotates a little bit higher, that will qualify as being a failed auction. And what a failed auction is that's when the market gets faked out. You'll see a little bit of a test beneath maybe a previous month's low, and then a big rally, that area right there at 86.27. Yeah, it's a big deal. If you wanted to hold longs right now, you probably could get away with it. You just have to stop yourself out if this market comes crashing down beneath probably 86.20. If you want to give it a little room, maybe 86. You can see this double bottom right there on the monthly. The low is 86.12, and the low there is 86.11. So 86 even is a big deal. So if you're holding longs and you're sort of sitting around hoping that price rises for you, number one, I'm pulling for you. I'd love to see you win, and if you don't win, that's fine too. But 86 even, that would probably be my line in the sand. If we break beneath 86, I would exit stage left. All right, let's see. JC, good to see you. JC, a U.S. dollar Swiss franc looks like it's changing directions. Let's go ahead and have a look at the dollar Swissy. For me, this is a good. Thanks for bringing this up, JC, because I probably would have forgot it. This area right here, this was a level that we had out last month. Now you see the calendar shifted. It's not 80.79 anymore, so we probably got to go to our text and erase it. But something like this, pretty good stuff. As far as our 13-month EMA, that's a big level. That's a big deal. You can see we haven't really traded above that for quite some time, really back since maybe March of 2025. So it's been about a year since we've even challenged that moving average. I'm looking for a challenge here relatively soon. The market has really tightened up here in this dollar Swissy. As far as change in direction goes, the bearish trend is still valid. No question about it. The long-term bearish trend is still there. But this area right up there, right around 80.23, that's pretty good stuff. That may be a great short. Maybe 80 even would be a great short a little bit later this month. But I would have that on the board. I'd be watching that one closely really through the end of May. But good stuff right there. Let's go ahead and go down to maybe a daily or maybe a 4-hour. I haven't looked at any really intraday time frames just yet. But you can see something like this developing on the daily. Are you seeing really a strong rally? I'm sort of not, jury's still out for me on this one, JC. Is it changing directions? Well, we could say, that's almost a hammer. That really is almost a hammer formation, which I absolutely love hammers. Typically, they give you a nice reversal. So we are trading up above Friday's, the 1st of May, Friday's high there. That's sort of a bullish sign. So I could buy into that for a minute, I think. This area right up in here, you've got a nice order block right up there, right around 79. So I would be watching it closely. Long or short for me, I probably wouldn't be committed either way. That's really a tough area to be trading on the daily. You've got sort of parallel Bollinger Bands. You've also got that area right there. Your 13-period EMA is right around 78.50. Bollinger midpoint at 78.59. This is what we would call a non-committal area, but we are chipping back in to that big bearish move that we saw last Thursday. We are pairing those losses and sort of getting back involved in what I would call an extremely sort of flat market. But if you want to hold longs, I don't blame you. Just stop yourself out if the market does reverse and you start to see people pile into the Swiss franc. If we see a resumption of the war in Iran on a large scale, more than likely you're going to be seeing some bids hit the Swissy. That's for sure right there. Let me see, Kelvin. Do you think the NASDAQ 100 15-minute might go back down with a fib? All right, let's go ahead and have a look. The NASDAQ, let's see, NQ. We'll go ahead and look at the US 100. I know that's what most of you are trading. You can see the daily sort of pulling back a little bit. Just right off the top of my head, first thing I would be looking to do is work right from that spike low. We're right at all-time highs. Seemingly every day you make new all-time highs. Today's no different. And then right there, 38% is big, right down 27,479. Maybe even 27.5 is a big deal down there. So right now we're printing 27.6-ish, 675. So we're only about 175 points off of that level. This zone down in here would probably be a very nice late day bid. If you're looking at the 15-minute chart, let's go ahead and have a look. Okay, so here's your 15-minute, relatively straightforward. You can see opening bell, ding, ding. There it is. Excuse me, that's 4 a.m. That's when, see, that's an easy mistake to make. Don't assume. Always check your times. Sells about 4 a.m., 6 a.m. Eastern, my time, but right there would be your ding, ding. So this is when the news out of the Strait of Hormuz started hitting this area right here. Sort of been relatively flat, and now the panic sort of was dominating which ways our market was headed. As far as this goes, spike high here, spike low there. Broke above 38%. Really good lesson for you guys in Fibonacci's right here. 15-minute chart. Nice big move. Spike high all the way down to this spike low. 38% was an absolute soldier. I mean, if you were taking those shorts, it worked very well once, twice. Compression. Now we broke above it. I would say that the buyback, apparently, it looks to be on. US 100 has outperformed pretty much everything on the board for about the past several weeks. This area right here at 62% on the 15 is a legitimate shorting opportunity. The thing of it is you don't want to get caught up in not necessarily the minutia, but you don't really want to get caught up in going against the trend on such a small duration. And what I mean by that is this area right here, 62%. So your order would be essentially a sell. You'd want a sell limit order right up beneath that zone, maybe just by a few ticks. You go ahead and sell that thing. That's not a position. You're not going to take a position on that trade. You're not saying, okay, that's the line in the sand. That's where this market's going to turn, and I'm going to hold this the rest of the day. That's not what I'd be looking to do here. This would be a tight scalp. I would be looking to make maybe a few $100 on it, maybe looking at 10 pips, something like that. You can see that your spread right now is about 1.8. So, I mean, that's very tight on this US 100. You certainly could probably get in there and make a play relatively efficiently with such a tight spread. So I would be looking to sell right from there. You can do the same thing on the NQ. I mean, if you're looking at NQ futures, the numbers are going to be a little bit different, but the market structure is the same. Essentially, they're all just tracking the US 100. So this area right in here would be the order. There would be your sell limit, and be looking to get involved right in front of that 62% level just by a few ticks. What is it, 15? So you probably would have to be, I don't know, right up there, 1350. Give yourself a little bit of room to work. But that essentially would be the trade. Be looking at 62% as potentially being a short-term resistance level, maybe looking to get in and out, 5 or 10 ticks, something like that could be pretty good. So a good thing. Let me see, Lebo. Hi, Shane. As a swing trader, which markets should I focus on that are good for holding positions on a long term, a very long term? Well, if you're going to trade derivatives and hold these positions in a derivatives market on something like a futures contract or a CFD, the first thing with futures is you have to have the margin money. It's expensive to hold full-size contracts through a market closure. So if you're looking to do that, you've got to find ones that maybe have lower margin. You're probably going to be trading the micro E-minis just so you can hold it through a market close. That being said, if you're trading Forex pairs and you're looking to hold for a very long term or maybe CFD products, you've got to know your swap fees. You've got to know how much it's going to cost you. Sometimes it benefits you. Depends on the currency cross or the asset cross. But you've got to figure out your swaps. And this is actually a free tool that we have over at Switch Markets. Forex Swap Calculator. Calculate and compare rollover fees for holding positions overnight in the Forex. You've got to be astute at swap fees if you're going to be holding through market closures. So what I'm saying is, if you are going to be looking at assets to hold for on a long term, a very long term, aside from holding physical metals, I probably would be looking at stocks, just because they're easy to hold. You just buy them and you hold them. The problem is you don't get to take shorts. Essentially, you've got to be able to take naked shorts, and shorting is sort of a touchy thing in the United States. You got to have a broker that will let you do it. And that is all very problematic. So if you're going to hold short positions over a long period of time, you've got to have market access. You've also got to know those swap fees. So I highly recommend this Tools, this Forex Swap Calculator. I'll drop the link in the live chat, but it's something like that you absolutely have to know, because a lot of these trades, they look really easy on paper. You'll sit there and say, okay, I'm just going to go ahead and short this thing. I'm going to go ahead and short gold. I'm going to short silver. I'm going to wait for the market to go in my favor, and then just go in and pick up the money. And you're not wrong on your market reads. The problem is the swap fees, the cost of holding those things overnight and through your market closure oftentimes makes the trades not even worth doing. So you got to know those fees. I would find ones with low fees or positive fees. Maybe they'll pay you to hold the position. If they want to do that, that's great as well. But for me, for the long term and very long term, I'd probably be looking at equities and stocks, or maybe physical metals or physical crypto, something like that. I don't have any problem holding physical crypto, so that's something that you could probably do. All right, CAD yen. Let's go ahead and take a look at the CAD yen. I know a lot of you are trading this one. Daily chart here. You can see nice big sell-off, and now we're rotating in the lower quadrant of last Thursday's range, and you can see how important this 38%'s been. We've just sort of been straddling it. I want to see this market move a little bit. CAD yen, a lot of people are holding longs right now and have been for the couple days, waiting for this big negative bar to fill in a little bit. It's not a bad strategy. But for me, I probably want to go ahead and just look to step up and scalp these things. 62% right up there at about 116.14, so maybe 116 even. That might be a pretty darn good sell up there. Sort of follow the trend that was established last Thursday. It's not even really a trend, it's just a breakout. But a lot of times what you see with a big candle like this, you just rotate around in here, and those are relatively pretty simple scalps. Not really too expensive either. Silver, you can see we put this chart out last week. Pretty good stuff. You can see we rotate right around $75. That is the point of control. There's no question about it. We called it down here. I said that's going to go back up and touch 75, almost guarantee it, and it has. So we've traded 75 the last couple of days. Let's wait and see what happens in this market. Until proven otherwise, you're bidding lower value and you're selling upper value. So you're selling 80s and you're buying 70s. That's a pretty darn good approach for this silver market. You've got to see a big move to really break out of this equilibrium sort of standstill that we're at 75. I know it's a significant range. 80 to 70 is a big range, especially with derivative silver, spot silver. That's a lot. I mean, that's a lot of money to try to trade that range with any sort of leverage. It costs a lot of money to trade silver. 427 pip spread. The spreads are volatile. They're huge. A lot of people won't even consider trading silver because of the way that they're structured in the derivatives markets. It can be done. Just take your leverage way down in a nice way to trade this right now. Reversion to the mean strategy. You're buying 70s, you're selling 80s, and you're looking for at least a little reversion back to 75. So that's a pretty good way of looking at it. All right, last market of the day is going to be gold. I haven't liked gold. I haven't liked gold for quite some time. I really haven't. Nice big bearish move today, though. You can see that we're off about 1.95%, almost 2%. Let's go ahead and step back to our monthly. We do have a key zone that we need to be aware of here, and it's a long-term zone, but it is present. You'll notice that we had an inside bar. Crazy March, war month, crazy March. April calms way down, and now we're driving beneath April's lows. April's lows is 45.10, and now your low right there is 45.01. This is starting to really fall away and become maybe a bearish break that could potentially check out our moving average, our 13-month moving average down there at about 4,100. Pretty good stuff. Still about $400 off of that, though. And then your long-term Fibonacci's would look something like this. I think it's very possible to get that trade relatively soon. 44.36, somewhere in that zone. Maybe 44.37.50, 44.40s is being decent bids. One last thing to check out here is let's take a look at gold futures. June gold futures. This was one of my bread and butter trades that I talked a lot about over the years, and I've executed these trades a lot. 45.22.2, and you're down there at about, 45.10.1. Typically, you see a long-term level on a gold market. When they get hit, they really do create participation. So you're at 45.22.2. I want this exactly. That is last month's low for June gold. Talking futures now. Let's take this down to a 1-minute chart and see what happened. Couple of observations. Anytime you have a key level, anytime you have a long-term key level, you have to understand that everybody in the world knows where it is. I know where it is. You know where it is. All the algorithms out there, the AI platforms, they all know where it is. So when we start looking at this, look at this volume. Excuse me. Volume picks up when we near this level. So they protected it there. Finally, you traded a little bit beneath that down to 45.20.6. Still a pretty good trade, believe it or not. That's a 16-tick washout. Could have been a nice little trade, even though it doesn't look like it went very far at all. It did. It went about 16 ticks. Take a look at the volumes, though. Anytime we're trading down right there at last month's low, business picks up. The volume spikes. So that tells us that the algos are there. Thus far, they've sort of defended that level. I'm looking for that level, maybe today's low going into tomorrow. I'm really looking for this to come off big because typically you don't see these real tight failed auctions on gold futures. Typically, you get a nice big move. So that zone right there, 45.10, probably going to be a big deal going into tomorrow's trade, maybe 45 even as well. So a lot going on with gold. I think I would probably be a net seller underneath 45.10, but I like our long-term level down there at right around, let's see, what was it? We just looked at 1,000 levels, it seems like. This long-term zone right there is what I'm looking at for spot gold, and that's going to be 44.36, maybe 44.40. I like that as being potential downside support. One last thing, we didn't really talk much about oil. We had a trade idea out. It was a banger. We just barely missed the entry. You were looking at 98 somewhere, right? I believe we were buying 98, 89s or something like that. Price went right down to 99.11. Could not get beneath 99.11. 13-day EMA. This is why I believe in my EMAs, my 13-period EMA over all the rest of them. Right there, 99.10 was that EMA reading. Today's low is 99.11, and now we're back up to 105.53. Absolutely fantastic long side trade. We just missed our entry point on our trade update down there. I still have it on the board because I am bullish crude oil because of the news cycle, and I think that as the war escalates, and right now we've been back and forth, back and forth, back and forth. We've been going between a peace deal, reopening the Strait of Hormuz, to escalation. We've been going back and forth during this ceasefire trying to figure out what's going to happen. Iran's shooting at U.S. warships. That's a major escalation. It's something they haven't really done yet. Supposedly, the Pentagon's denying it, but I'm seeing it on international news services that, yes, it did happen. We're going to find out more and more and more about it, but be very, very cautious about this situation in the Strait of Hormuz. If a boat sinks, whether it's a tanker or a warship or anything, you're going to see a major escalation, and I mean the markets are going to go crazy. It feels like that's sort of what's happening right now. Let's see, the $100 bid. The $100 bid for oil was beautiful and really a no-brainer. The only problem with bidding 100 is that you had to hold it a little bit. But, I mean, as soon as the news hit the wires, I mean, the crude oil just exploded back up to 105. I believe we're going much higher. The fuel situation here in the United States, even where I live, it's a state where our fuel prices are relatively reasonable. They're not huge. You're not talking about like a Los Angeles or a New York City where you're paying $10 a gallon or something crazy like that. But I saw the 50. It was up about 75 cents over the weekend, which is a significant jump here in Montana. So I was looking at I went from paying like $3.89 up to $4.49 per gallon of gas. And I know a lot of you guys buy liters of gas in the EU, and the folks I talked to this morning that are in the EU, they said that the gas prices are about double what they are here in the United States. So I say that I am sensitive. I understand that a lot of people got it a lot worse than $4.45 a gallon, $4.49. But what I'm saying is it was a major, major jump in prices, and that's something we can't ignore. This fuel, as we go into the summer months with a potential war in the Middle East, this fuel situation is going to be very, very serious. If this war grinds on another month and the Strait of Hormuz remains closed, the price of gasoline is going to be $7. That's going to be a national average. We lived through it back in the big crash back in 2008 to 12. We had a period of gas prices right after Arab Spring in 2011. We saw oil spike up in the 130s, 125s, and 130s in our gas prices. Price of diesel. I mean, truckers were parking their trucks because they couldn't afford to fill the truck up with diesel. And everything really started to grind to a halt. We're on the precipice of the same type of situation here. The war doesn't need to drag into the summer months, and if it does, the impact economically is going to be severe. And we're starting to see that it doesn't look like it's over. A lot of us thought it was over. I was one of those. I said, this is winding down. I don't know now. Shooting at warships, that's going to draw a response. I didn't even get into the missile, the hypersonic missile the United States sent over. More than likely, they're going to use that thing because they want to see what it does. But we'll talk about that maybe more tomorrow. All right, remember, streaming schedule is going to be a little bit different this week. Tomorrow I'll be on at 10 a.m. Eastern, which is 8 a.m. my time, nice and early, about 30 minutes after the U.S. Open. We're going to get in there, see about making some orb trades. We're going to trade probably some commodities, maybe gold futures if it's active at the time, and we're going to get in there and execute a few trades. Didn't get one of our pullback levels to come into play this live stream, but that's all right. That's all right. We'll be back tomorrow with more. If you guys have any questions at all, be sure to reach out to me at howtotrade.com. Get your free account. Send me a private message. More than happy to speak with you. But tomorrow should be a lot of fun. Today is a big day, and it looks to me like the markets are back. Volatility's back. Pretty rare for a Monday. We've seen a lot of quiet Mondays. So this is the markets are active, that's for sure. Time to start looking at Ferraris. A Ferrari, I mean, holy cow. I think there's a YouTube video out there. The guy had an Aston Martin or something and took it in to get its oil changed, and it was like $2,500 to get the oil changed. That was hilarious. I said, $2,500 to get the oil changed, huh? Wow, that's big. Let me see. T Marina, can we trade a FX pair 2 during the orb? You can if you want to try it. It's a concept that I didn't really prepare for, T. The reason why is I always see that the currencies typically are moving hard starting at about 8 a.m. Eastern. So they actually you start to see, at least in currency futures, the volumes start to pick up about an hour and a half ahead of the Wall Street Open. So I can, we'll get into it. We'll get into it. Maybe I can build out some orbs. I like the 4-hour chart for the orb at the beginning of the trading week for the Forex pairs. Gives you a nice swing trading approach every Sunday. You got a chance to get into the market and get in on a side. As far as, we'll take a look at it. I got to think about that. We'll take a look at it, though. All right, everybody, that's a wrap. You guys have a fantastic trading session. It looks like everything's alive and well. Remember, one eye on the news cycle, one eye on your charts, because if they're exchanging fire in the Strait of Hormuz, this has the potential to really blow up here relatively soon. I would imagine the ceasefire will be declared over any minute if they're shelling Dubai. Yeah. All right, everybody, have a fantastic trading session. As always, trade the action well, and we'll talk soon. See ya.